So can you retire just off of SoFi stock? So that's what I'm going to go over in this video. We're just going to do the simple strategy of cash secured puts and covered calls using SoFi. And we're going to use a compound interest and calculator. So let's just jump right into it. So here we are on Robinhood, like showing SoFi, and we're always going to be selling options. We're selling and put. So let's use 175K. Right? Let's do something that is kind of ridiculous, but also kind of doable at the same time. So compound interest and calculator, 175K. Let's say we're making around 4% a month, because that's what I usually aim for my wheel strategy, and which I've been actually able to do with my portfolio. So 4% monthly. Let's just do it over 1 year, and we're going to do no more deposits after the initial 175. And here is the calculation. So initial balance is 175K. Time needed to double the investment will be 1 year, 6 months. So future investment will potentially be 280K. Total interest accrued over a year, 105. And this is all assuming that you're going to be putting this money back into SoFi for a whole year. And then at a whole year, you'll have 280K, and then you can do whatever you want with that. And that's a lot of money. So let's work on that, because obviously you can see 7,720. Like, that's how you have to do this if you're doing this the compounding interest way, because you're gonna have to look at it this way, that if you weren't compounding, you're just keeping steady at $7,000 a month. Can you live off of that? If you're living in like the Midwest or something like that, because I have rental properties in Ohio, and my mortgages there are only around like 500 to like $800. So you can definitely do it out there, but living in New York probably can't, or California probably can't, any of those bigger states. So SoFi. So what we're going to do here is we're going to do the typical thing that I always go over, is that you need a delta of 30 to 35, 40 if you want to be a little bit risky. And we're going to go from there, and we're going to go a month out on these options. So this can be April 25th, 33 days out, selling options only, selling put, because that's where I always say we start with that 175K. And then we're going to look for delta. So at the 12 delta, we're at a 31%, and this is closer to 40. So we could do, let's just go with the safer version of 30, it's like 32% delta. So delta, for those of you that don't know, is the percentage chance that the stock price is going to hit your strike price. So the current stock price right now is $12.90. 32% chance by Friday, April 25th, it will be at $12. And SoFi for me is one of those stocks that is going to take over the banking game, investing game, because they're already doing loans. So they're already doing that. So that's like banking. They have high yield savings, banking. They started an investment platform. Can't sell options on there yet, but you can buy options and you can buy stocks. So they're growing. They're going to be the big disruptor in finance. Them and Robinhood, I believe, are going to do really big things. And their CEO is actually Anthony Noto is making like a personal brand out there too. He's being seen on X. He's doing a lot of interviews. He's being shown, which is also a big thing, because branding is huge. And you could see that how Tesla's rise to fame with Elon Musk, and how Tesla's dropping because of Elon Musk's, because of the personal brand that he has. But enough of that. Let's get into 175K SoFi. Can you potentially retire with it? So $48 per contract here. So let's go with that. Let's hit continue. Let's do it so you can see it better there. So if you had 175K, how many contracts are you going to need? Is that 100? That's 115K. 150 is probably too much. 150. Go to edit. Oh, 150 contracts will have you at 172K. So perfect. And that's going to get you a credit of $7,193 a month if you had $172,000. And you guys have to remember that that's a lot of money. $7,000 a month. And if you're able to potentially do this over a year, if SoFi continues to stay at this volatility level and slowly go up and to the right over time, you could potentially make this over a year. And then if you could do that, then you're going to be making bank over time. So $7,000 here per month. And again, we could show that at the compounding interest calculator, like that's potential 4% interest. But let's just go into here and just say $7,193 a month times 12. You're going to make $86,000 just if you're just collecting premium. If you're not reinvesting this back into like SoFi or other stocks where you could get another insane premium with the amount of money you're making, like if you put $7,000 back into SoFi, you're getting another like 7 contracts. That's how you want to look at it, or like 6 contracts. And if you keep doing that, that's how you get to these numbers right here. But if we're just staying here at 7,193, you're gonna make around $86,000 on the year, which is nothing to like whisk at or whatever the word is, because like $86,000 is a full-time income for a lot of people, and that is a significant amount of money. And say if you ever got assigned at say $12, now you're on the covered call side, and then you would just put your covered call strike price just like $1, $2, $3 above, and play the long game with the selling call side as well. And then you could also capture the premium, so you could potentially be making a lot more money on the covered call side. Premiums on the credit, you might be a little bit lower, but if you're also just making, if you're potentially making appreciation, it's going to be per contract. So if you just put this $1 above, say if you had to buy 12 and you had to do 13, so $1 times 150 contracts. So you get $100 per contract, and then you're going to times that by 150. You're going to make another 15 grand on top if you just put it $1 above whatever your cost basis was. You're going to make another 15 grand on top if SoFi went past your strike price by the time of expiration, which is significant amount of money. So the question, can you potentially retire off of SoFi? Yeah, if your yearly expenses is around 80K, you could potentially do it, because you'd be making around $7,000 a month just selling cash secured puts and covered calls. And it'd be even better if you were able to consistently do this for a whole year, where you make 105K of just like collecting premiums, and then you could use that to invest elsewhere, and then you could use that money to really get you to retirement. Because if you're able to consistently do the wheel strategy and win correctly, all you got to do is just continue making premiums. And like, for those that know me, follow me on Instagram, I've been showing that, yeah, my portfolio is down, as is everybody's, but I'm still collecting a certain amount of premium every month, whether it's 2 grand to 10 grand, where when the market does come back, because I didn't sell many positions, I'm going to be back where I was at all-time highs, plus all the premiums that I've collected. So this is the way I personally build wealth. It's something that I believe everyone should look into as well. And thanks for watching. Remember, not financial advice, and I'll see you guys very soon. Peace.